Okay, so we're going to continue here with Chapter 8, Stock Type Daily Setup 6, Gap Down Reversal, also sometimes called the Dead Cat Bounce. So this is when you have, and I'll just move my video here, a gap down stock, then bounces off the low. Sometimes this is also the case with a recent parabolic stock. It sells off hard and then bounces off the low. So we kind of talked about this with the gummy bear kind of bouncing off the table. You know, rubber band that gets really stretched out, snaps. And so when we get a really hard bounce, sometimes, or a hard sell-off, sometimes we expect that bounce off the low. And the expression that people have used is dead cat bounce. They call these dead cats. So there's a lot of dead cat expression. Not a lot of cat lovers in the camera, video, and also trading space, I guess. I don't know. So anyways, let's see. So the gap down reversal, dead cat bounce, gap down reversal stocks, they're not my favorite setup. However, you will see me trade them from time to time when the conditions are right. The right conditions would be a hot market with really strong momentum or a lack of anything else to trade. Therefore, this becomes the best of, you know, what's out there. Sometimes you'll hear traders refer to this setup as the dead cat bounce. I'm not sure where that phrase really originated from, but so this is the setup. While each of the momentum setups are valid in a gap down reversal, is generally not my favorite stock type. There's inherent weakness with a stock gapping down anywhere from 20, 80, 90%. I mean, these are big sell-offs. So when you have this type of big gap down, you know, you just, to me, I just look at that as there's bag holders. Is it really going to be worth it? But then there have been times where we've seen stocks that have had big gap downs and then just bounce. And you're like, wow, okay, that was huge. So for that reason, you know, try to keep an open mind that sometimes they're available, but you know, again, it's not my typical. Almost on any given day, I would much prefer to trade a typical momentum stock at the high versus a gap down reversal. So I call it a gap down reversal. The dead cat bounce setup. In the case of a dead cat bounce setup, we're looking for a stock that had made a parabolic move yesterday, or perhaps in the last few days, and then sold off really hard off the high. Now, we can do this intraday as well as a reversal, and we'll talk about that a little bit more in the reversal chapter. We did talk about it a little bit in the context of some of the dips, which were sort of reversals off the low, because it was that V pattern, really strong sell-off, and then a bounce back up. So we can sometimes see them intraday, but this section of Chapter 8 really is more about kind of the daily condition of a stock that just adds so much more strength to its intraday setup. And maybe just to further justify why this is in this section, you know, the gap and go section, obviously a dead cat bounce is not going to be a gap and go because it's gapping down usually. But that's funny, Josh. So he's suggesting call it a dead mother-in-law bounce. That's cruel, is what it is. Your wife would be really upset with you if she knew you said that. Or your husband. I don't want to judge. So, anyways, so the thing is, when we're doing the gap and go trade, you know, usually, I mean, the daily setup. I guess all of these daily setups really are totally valid on gap and go trades with the exception of this one. Special acquisition company, daily condition, stock type, that's valid. The parabolic continuation, blue sky, those are all really valid. So maybe the next time I teach this, I'll move all of these, this whole bulk of daily conditions, just move it up to, I don't know, Chapter 3. The only problem is because they have so many charts, it's helpful to already really understand charts before we get into it. But in any case, so this is a gap down reversal. So STSA, so a strong sell-off. It's a pharmaceutical announcing top-line results. Migraine drug fails, and we can't see the rest of it, but it's safe to say that the top-line results did not meet expectations. It has dropped 75%. Huge sell-off. but it ends up, while it was one of the leading gappers to the downside, so we would see that still on our gap scanner. Of course, our gap scanner also looks at the biggest gappers. Where is it? Our top losers. Is it in this section? Now I'm sort of, hold on one second. No, it's right down here. Yeah, so here we go. So this is our gap column. I was confused. So this does show us our leading gappers to the downside. And it's, you can always pull these up and take a peek at the chart and, is there something here to trade? I don't know. But in this particular instance, we've got certainly a open around 450 and a squeeze up to 650. I mean, that's, 30-40% off the lows. So it did end up working. I don't know. That one worked. Here's another one, a strong sell-off, but then it does bounce. But notice on this one in particular, we're going to run into the 200 moving average coming back up. So, this can be the right type of stock to trade if it has high relative volume, which it almost always will because it's such a big drop down. Sometimes they gap down and sell off lower, so they could be better for shorts. Although, on the other hand, a lot of times when they gap down like this, the market is sort of it's this institutional, all of the, short sell restriction and the difficulty borrowing shares. The market's designed to go up. So when stocks drop, it's a buying opportunity. You know what I mean? So they can still be considered buying opportunities by big funds on a drop like this, depending on the news. It's just a long bias market. So ACY here, this is a little bit of a dead cat bounce setup where we had this crazy move from $8 up to $38. Then it sells off all the way back down to 6. And on this day, it goes up like 200%, back up to 14. It makes, or 100% at least, it comes back up. So on this day here, this was also the first daily candle to make a new high. So it's not our traditional bull flag, it's not like a nice orderly pullback and then first candle to make a new high. This is more of, it's a huge kind of topping tail green candle, I guess, that then goes a little bit lower. But then on the first day, it makes a new high. Given that this was like 1,000% move, that move right there on a stock like this could be 100%, 200%. So that first daily candle to make a new high is kind of a bounce off the low. We don't need a fundamental catalyst for that. This stock is already being watched really closely. Now on the sell-off days, there wasn't a lot of interest, but once it starts to pick back up and halts going up, traders are coming back in, volume comes back into it. This is another one, same kind of setup, same day actually. RHE goes from $2 to 16, comes back down, closes the day with this huge topping tail, candle. So not a pretty daily candle. The next day though, it bounces off the low from 260 up to 6. So that can be also explained by short covering. Big sell-off, shorts who are swing trading it to the short side, then we'll cover, obviously, if it starts to bounce and look better, depending on what their average is. But, you don't want to be short and then have it go up 300%. You feel like I should have locked it in sooner. So if it does keep going higher, then we can continue to see, we can continue to see that a little squeeze off the low. So that, again, it's actually a setup I didn't even include in previous classes. But then, you see a couple instances where you're like, all right, and you actually trade it and you think, all right, I guess I have to cover it a little bit. These instances are different because these are not gap down setups. These are stocks that were just parabolic and then sold off really hard and bounce off the low with a little short covering. So the short covering is kind of fueling that. When you have a stock like some of these ones here, and we can look at some of these charts to see how these trade today. These are just today's biggest gappers to the downside. These aren't really going to have necessarily a lot of short covering unless you've, for some reason, had someone swing trading it short, expecting that the top line results were going to fail. So these don't have necessarily the bounce from short covering, but in this case here, you obviously can see that we had a big gap down of OTIC 48%. And it's up on the day from 260 to 320. So this gap down this is a gap down reversal. It gapped down and it bounced up. FIZZ. Now this is a reverse split. This is a stock split. So this one, actually, it's a traditional stock split, not a reverse split. So that's a false, that one's not real. EBIX. So EBIX gaps down, sells off, and then a little later in the morning does do a nice red to green from 27 to 32. One of the things with a gap down reversal is that your upside profit potential is always just sort of inherently limited by the fact that how much is it really going to go back up? It's gap down 75%. Is it really going to fill the whole gap? Because if it fills the whole gap, then, then the news was like totally just ignored and it bounced back up. But there was news out, so it's probably not going to come all the way back up. So the upside, it's unlikely that it'll go parabolic, but sometimes they do, but it's very unlikely. Your odds of a gapper going parabolic are exponentially higher than a gap down going parabolic up. So JE, BCLI, this one's gapping down 28%, sells off at the open. So this is gap and go down, gap down, go down, right? So is JE at the open. No, sorry, this one actually popped at the open. EBIX continued at the open. So gap down, go down. So sometimes you might see some of the large cap traders focus on something like this for a gap and fade. Although often I see them trade gap and fade on something that gaps up and they look for that fade. That's more on a large cap stock. So if we look for a higher float, NKD, well, that's a cheap stock. That's not going to be one. Actually, I don't really see any higher price. CCIV is a higher price gapper. So that's a gap and fade on a higher price stock. Again, more institutional traders taking profit off the table. TITN, this is not really small cap. No, that's different. So anyways, back to the gap down. PBR, this one, so it looks like a petroleum related company. Hard sell off from 10 down to 8. Bounces a little into the open and then just kind of goes sideways. So this one, at a certain point, we could look at this and say we have a gap fill potential here from 810 to 993. But of course, given the fact that this has a float of 6.5 billion shares, we would probably never trade it. LYL, 6 million share float, gapping down 20%. But a $3 stock gapping down 20%, that could even be, a continuation. You could gap down 10% and then continue. So that's not extreme enough to be considered really and we usually, if we're looking at something for continuation, it may be on the gap scanner going down 5 or 10% or 15%, but we're already going to be watching it. So today, TAOP, we'll be watching, and it's certainly possible that this will gap down overnight. Let's say it closes at, we still have an hour to the close, but let's say it closes at 13 and then it opens at 12:50. So that is a slight gap down, but we would have it on watch most likely tomorrow because we would recall what was strong yesterday. As part of the gap and go strategy and looking at building our pre-market watch list, usually we're asking what was strong yesterday and is that in play for tomorrow? That's why it's always tricky to take days off because then you lose your connection with what was happening yesterday. But you can always ask people, what was going on yesterday. Tesla. So this one is starting to, this is a significant pullback on Tesla that we've seen here in the last 2 weeks or the last week. Not that it hasn't done some sharp pullbacks before and bounced right back up, but notice it's on much lighter volume. So volume is decreasing a bit. So anyways, this one, I don't know that I would say if it gaps down tomorrow, it could continue to do a gap and sell off. So it did a little bit of a gap down last night or into this morning and then popped up a little and then faded. So a little trickier there. And then what are some other big movers? SCKT, this is a big mover from last week. And so we had the big move here from 4 up to 36. And the next day, it was gapping down slightly, right? Gapping down slightly. Now, this one over 1750 Could have been a long for a squeeze back up to 2022, but in this case ended up not bouncing and continuing to fade. So this one potentially first daily candle to make a new high on a bounce off the 9 moving average. Could be a little bit of a short bounce, a little short covering, but probably not too much, because at this point, I think if anyone was swing trading it short, they probably would have already covered. Sava. So, you know, this one gapped, but ended up selling off, but that's not really a gap down reversal either. It was a gapper to the upside. So anyways, again, not my favorite strategy, certainly one you could totally do without, but you know, sometimes if there's nothing else and that's the best that we have and you really want to trade, you know, you could certainly apply the same setups as you can see here. You know, this in this particular case, this one was a little juicier because it was that, you know, had the potential given the recent big move. So this I would be more interested in probably than your typical gap down reversal. Gap down reversal like this, you know, yeah, it went up from 7 up to 8, but I usually just don't really like these. The bounce after that hard sell-off is usually a bit stronger. All right, and with that, we'll continue into Chapter 8, Setup 7.